All right, first let's take a look at the day's market headlines. Will they or won't they? This is worse than an episode of Friends, I gotta tell you. Mixed signals on the fiscal cliff from congressional leaders sent stocks whipsawing. However, the major indices all closed in positive territory at the end of the day. The Dow rose 36 points. It's something, come on. Shares of Research in Motion hearing words they're not used to. Buy. Analysts at Goldman Sachs upgraded the company, citing positive prospects for its upcoming BlackBerry 10 smartphone. Shares rose more than 3%. Look at that. That's a huge day for RIM. And Pandora shares soared more than 7%. Comscore released a new method to measure audiences online, and the findings revealed that Pandora has a whopping 59.9 million unique visitors. Clearly, music to investors' ears there. All right, our top story tonight, a huge potential change that could affect homeowners from coast to coast. Everyone knows that one of the big reasons to buy a house is to take advantage of the mortgage interest deduction on your taxes. But now that formerly sacred and untouchable deduction is on the table as part of the fiscal cliff talks. The enormous tax break cost the government about $100 billion a year, and you know that they are looking under every rock for revenue. But taking it away would surely turn potential buyers away from the housing market, and the end result could be devastating to the economy. With me now is economist Lindsay Piegza from FTN Financial. We also have Dan Mitchell from the Cato Institute. Welcome to you both. Lindsay, let me start with you. We shouldn't be surprised everything's on the table here, right?
Sure. But this is a big potential problem because there's no doubt that it would cause prices in homes to fall. Now, we know that when
to rise.
I'm sorry?
If you took away the mortgage deduction, it would cause prices to rise.
We would actually see prices fall because what you're seeing is the demand for homes would teeter. This is one of the biggest decisions when you're deciding whether or not to rent or purchase. This is a huge incentive. You remove that incentive and people are going to drop out of the marketplace. So all of a sudden you're going to see a lot of potential home buyers, would-be home buyers, drop out of the marketplace, and we could see home sales plummet and cause a decline in prices of up to 10%. So this could really undermine any of the momentum that we've seen in the housing market as of late.
See, that's an interesting point of view because when I'm looking at buying a house, you discount what your monthly payment is going to be by how much you save on your taxes. So to me, the price of owning a home would go up because I wouldn't have the deduction. But if you're saying they're falling in concert, maybe the whole thing washes out then.
Well, the problem is it doesn't just stop there. Now, we saw in this morning's third quarter GDP report that residential investment actually increased 14%. So we saw a 3/10 contribution to that headline growth. So right there, all of a sudden, we're talking about derailing the housing market recovery. That could be up to a 0.5 percentage point. But again, consumer confidence is up to a 5-year high, in part because the housing market has been stabilizing. So all of a sudden, if we see the housing market take another head for the worst, well, we could see consumers pull out of the marketplace and completely derail this recovery.
Dan, I mean, everything that we talk about trying to change here to solve this problem, some group comes out from the sidelines weeping, you know, with Kleenex about what's going to happen to them and to the economy as a result. I mean, whether it's, you know, seniors come out and they talk about, you know, if you raise the tax on dividends, that's what we're living on. I mean, everybody has their tale of woe, and it's all legitimate. I mean, everyone's going to be hurt, but we've got to do something.
We have to do something, but I don't want to give the government more money to waste. So I'm all in favor of, as part of a move to a simple and fair system like a flat tax, I'm all in favor of getting rid of the mortgage interest deduction, even though I've been taking that deduction for 25 years. We don't want to have politicians trying to tilt the playing field and distort economic behavior in a way that contributes to housing bubbles, that undermines investment in the private economy. You look around the world, Australia, Canada, England, Israel. There are lots of countries that don't have anything close to what we have in terms of preferences in the tax code, yet they have the same rates of home ownership. Look, I
hear you. Let me jump in for a second. I mean, Lindsay, Dan makes a fantastic point, a couple of them. And one of them is that by virtue of putting this deduction out here, we're making a value judgment about home ownership and encouraging it. The government is saying home ownership is great. Well, it hasn't been great for a little while. Well, a lot of people got hurt in the market because the government was telling people to rush in. So maybe they just create distortions with this type of thing.
Of course, that's the government's best job, is that they do create distortions in the marketplace. And I completely agree with your other guests that what we need to do is reduce those deductions, make it much simpler, much fairer tax code, and completely eliminate those entirely. Now, that would make sense. That would allow everyone to understand exactly what they were paying, and it would put more cash back in the pockets of Americans so that we could ramp up spending. ramp up investment, and get small businesses back on the tail to take on new employees.
Yeah. So you're saying doing this would hurt the housing market in the short term, but from a larger economic point of view, if we eliminated all the deductions across the board rather than cherry picking groups.
Exactly.
That would
and
have
that's the problem with Washington right now, is that we have such a short-term view. We need to look at these long-term policies that will get us back on the path to long-term prosperity, rather than just putting a Band-Aid on the situation and getting 1 or 2 quarters of positive growth.
Dan, I mean, if we did something like that, can you honestly say, because Democrats always say that's all nice and good, but the math doesn't work. You know, if we eliminate all the deductions and we go to, you know, a tax code that's so much more straightforward and is more simple, they're going to raise less revenue and we're going to be in a deeper hole. What do you say to that?
Well, this is the problem. Nobody in America, or very few people anyhow, trust the politicians in Washington. And what they're talking about right now is a perfect example. They're not talking about getting rid of these deductions as part of a process of giving us a simple and fair and non-corrupt flat tax. They're talking about getting rid of or capping these deductions so they get more money to waste.
Right.
So I think the math adds up perfectly if we actually use the money for tax reform. And there are like 31 countries in the world now that have flat taxes. They're working very well, but we know the crowd here in Washington has the wrong idea in mind. So I'm happy getting rid of the deduction, but not to give the politicians more money.
Yeah, I hear you, Dan. That's a great point. Thanks to both of you. I wish we had more time. Great points on both sides. We appreciate it.